It's very clear that these higher grade domains exist, and the more we drill, the more of them we find. So that's very positive. End of this year, pre-feasibility study. End of next year, definitive study. All of next year, conclude permitting. I would call this project construction ready, more or less at the end of next year. The company is heavily undervalued at the moment, and that's why we don't want to finance at this point. But I don't only do this for shareholders. I do this, I'm a very proud Namibian. I do this for socio-economic upliftment of the country. And I do this because I truly want to see this project develop, because we'll make such a huge difference in Namibia. Constraining should give us between 5 and 15%. Byproduct should give us another 5 to 15%. And then the high grade shoots maybe another 5 to 15%. Now, we're going to land somewhere in the middle, but that's how I get from 0.35 to 0.45% copper equivalent. New mines in Zambia are being built on mineral resources of sub 0.5%.
All right. Today we're having a chat with Heye Daun, the CEO of Koryx Copper. And Heye, thanks for swinging by again. Recently, you released some stellar drill results. Perhaps you can take us along what they are and what the context is behind them in your 2025 drilling campaign.
All right, thanks, Stain. Great to be back on your show. So let me just set the scene. Basically, we took over a project that had some credibility issues or some legacy issues. Mainly, it was seen to be potentially too low grade, and it had some other credibility issues around the processing. So me, as a mining engineer, many years of experience building, operating mines, etc., mainly in gold, not so much in copper, I looked at this deposit and I said, is that really so? And I mean, one of my key strengths is I'm not a herd mentality guy. I look at things independently, and I don't mind going against the herd. So I looked at the deposit and I realized, it hasn't been drilled very well. It seems to be open in many directions. There's clearly potential to improve this. At the same time, the predecessor company who we took over had just done one really good thing. They started drilling inclined holes, so they intercepted some different structures. So that gave me enough to think, wow, if we drill this enough, we can improve this. But that's obviously a general statement. So now I'm coming to the drill results. So the idea is for us to reintroduce credibility by improving the grade, doing a credible technical program, including enhanced metallurgical test work to prove a feasible processing route, and thereby prove up the techno-economic feasibility of this project. If we can get that right, we have an absolute rocket over here. We have a huge opportunity in front of us in terms of financial re-rate for shareholders and for ourselves. So that's what we're trying to do. And I think these drill results here demonstrate that so far our thesis is correct. And that thesis is this project has been badly represented, and the numbers that are currently on the table do not reflect the true potential of this deposit. So talking specifically about grade, which gets me to these drill results, I like to call it my arrows in my quiver. I've got 3 arrows in my quiver. These are arrows to improve the grade. The first one is to bring in the byproducts, because they've never been reflected before. That is moly and gold. The second one is to, through infill drilling, constrain this resource more, which is a very well understood concept. That's basically when you drill at wide spacings, 300 meter spacings, you've got a very strong averaging effect, or you're smudging everything out, smearing everything out over a large area. As you drill more closely, i.e. infill drilling, you can define things more closely. It's like squeezing the sausage, if you know what I mean. Like you're squeezing the sausage into a smaller volume. That has a natural upgrading effect. You're not creating more metal. You're just pushing it into a smaller volume. So we're going to do that, but you need infill drilling for that. And then thirdly, and that's again for these results, targeting higher grade domains. We're not calling them structures anymore, we're calling them domains. And that's what these drill results show. So looking at the numbers itself, the current mineral resource that we took over had a mineral resource grade of 0.35%, copper only. And my internal target, my sort of ambitious target, but I do think realistic target, is to get this mineral resource to a grade of 0.45 copper equivalent. If all my 3 arrows come true, then I think we've got an opportunity to do so. With that grade, we've got an economic and highly attractive future copper mine. And so if you look at these drill results here, you can just scan your eyes over it. We've got between 50 and 190 meters. Let's call it 100 to 200 meters, running between 0.4 and over 0.53% copper equivalent. And that basically demonstrates my thesis. Now, these results, I must say, one thing you have to be very careful of is there's always bias involved, because it depends where you drill. Obviously, these results were targeted specifically in some of the areas where we expected some elevated grades. And we basically expanding the envelope of those areas more and more. But this is the first step. We've got drill rigs out there. We've got 4 rigs. We're going to 8 rigs. We've got to do a lot more drilling and produce a lot more results like these.
Great overview, Heye. Thank you so much for taking us along there. And perhaps we can try to visualize these last 2 arrows. Of course, you talked about your byproduct gold and moly first, and then second one are infill drilling and the high grade domains that you're targeting. Perhaps we can try to visualize that for viewers at home. How does it look like actually with your drill campaign in 2025? Which areas are you targeting, and how we really try to drive these arrows throughout the year?
Okay, so let me again, I'll make it shorter, but just a very quick geological explanation. This is a porphyry. A porphyry is a result of volcanic activity. Generally, a porphyry by definition means the grades are lower, but it's highly disseminated. Imagine like a fog of mineralization in a wider rock mass. So that's a porphyry. But, we are in an area of plate tectonics. So plate tectonics means moving apart and coming back together. So you have folding and faulting. And this deposit has been subjected to folding and faulting subsequent to its original formation. And this deposit is very old. It's 2 billion. It's one of the oldest porphyries in the world. So there are at least 4 phases of deformation that have been identified. Deformation is just a clever word for structures. So the drilling that we're doing now and the drill results we just spoke about are targeting these structures that were formed by subsequent deformation. And those structures were previously missed because Rio Tinto drilled vertical holes only. And these structures are generally subvertical. And I mean, this is a classic story. This happens time and time again all over the world, where the old timers, when they first go in, they just do a quick and dirty vertical holes, quick, not very deep, but it misses a lot of potential. So by drilling inclined holes, you are intersecting these subvertical structures, and that's what we're doing. So that's specifically where these higher grade domains come from, and we're calling them domains and not structures, because we're not 100% sure whether they are directly related to the structures or another geological process associated with that deformation. But that's, academic for the average investor. It's very clear that these higher grade domains exist, and the more we drill, the more of them we find. So that's very positive. And the drilling we just put out demonstrates arrow number 1 in my quiver of 3, if you remember. And that's, generally speaking, we do that. If you look at these hotter areas, like the reddish areas, are the better areas. There's another slide here, you don't have to show it. You can see up here we've got 4 target areas, target 3, target 2, target 1, and target 4, which is offset. But that's okay, we'll come past it just now. Target 3 is clearly one of the better areas because it's got higher grades, but the other areas are interesting as well. So some of the drilling was in this area. In fact, there is a slide somewhere else. So there you can actually see the latest results we put out, and you can see the thick sources are the new results. And you can see they go in different directions, obviously targeting these high grade areas. What's very interesting is if you look at the ones that I circled in red, those are the ones that end in mineralization. Because one of the problems we have is that it's very difficult to identify this mineralization by visual interpretation. So that hole, for example, ended in mineralization, and so did many others. So it's very clear that down here, the mineralization is open at depth. So we're going to target that in the future, just not there yet. And over here, we are data limited. So we need to get more drill holes in. So generally speaking, we want to increase the size of the resource by drilling, let's say, some of these areas and stepping out. But more important than increasing the size of the resource is to grow the higher grade envelopes. That's what we're doing here. We're doing it in other areas too. In addition to that, if you go to the previous slide, that's a plan view. And sorry, it's a very busy slide. I'm trying to show a lot on one. Over here, the section we just looked at runs through like this. So you can see there's target 3, target 4, target 2, target 1. These are just sort of clusters. But you can see the green holes are all the holes we're planning this year. And the red holes are the historical holes. You can actually see quite clearly that's a 300 meter spacing there between the red holes. And we're going to infill that entire area. That's 50 to 60,000 meters of drilling that we're doing this year. At the moment, the drilling is focused on getting higher grades, but we are basically going to infill that entire area, which will then enable us to get to arrow number 2, which is increased constraining, and arrow number 3, very important, bring in the byproducts, because we know that the byproducts are there, moly and gold. It's just that the previous owners didn't assay for it consistently, and that's why we can't. We don't have enough drill results to project these byproducts across the deposit. They do vary. In some areas there's more moly, in other areas there's less. But the byproduct should, on current indications, give us between 5 and 15% extra grade on a copper equivalent basis.
Thanks for putting that into figures. There was actually a follow-up question from mine. So 10 to 15% more grade in copper equivalent basis thanks to that moly and gold byproduct. Roughly speaking, of course, you're going to have to put those numbers out. Quick follow-up question on those drill holes ending on mineralization. Perhaps you can take us along. Can you actually deepen these holes after the fact? It's of course a great problem to have to end in mineralization. How does that work for the viewer at home?
No problem. You just put a drill rig back there and orientate it correctly and get the rods down there. At the moment, so therefore, practically speaking, it's no problem. There are logistical constraints, normal constraints that we have. Like, for example, this project hasn't had such a drill program in a very long time. In order to drill with many drill rigs, you need people, you need rods, you need rigs, you need contractors. And it takes a bit of time to ramp that up. That's happening right now. One of the problems we had, for example, is that the drill contractors don't have enough rods. So this is about 300 meters. You can see historically the drilling has only been to about 300 meters. Clearly it extends, but so we're getting more rods, more rigs. The other problem we have, actually, if you go to the picture, it's a bit hard to see, but you can see a lot of topography. Like between where this was, by the way, at our last site visit, these investors are standing about 150 meters above the bottom there. And 150 meters doesn't sound like much, but it's difficult to get rigs onto these peaks. And that's why we bought what is called man-portable rigs. And we're dragging them up there with chains, etc. It's quite a logistical undertaking, and that's why it will take us a bit of time to drill those holes. But yes, for sure, we will go back to those holes and deepen them, but will take a bit of time.
All right, great, Heye. Thank you for that context there. We've talked about the first arrow, the moly and gold byproduct. We now know that's going to potentially increase the copper equivalent percentage grade with 10 to 15%. The increased drilling frequency or infill drilling, what effect would that have, do you estimate, on the resource you currently have? I know your entire resource, if we look at it here, this slide here, 0.35% copper, quite a large resource already in place. What effect should we expect from just more frequent drilling, infill drilling?
I can't give you a number. I can just point to the history. If you look at when we took over, we had a mineral resource that was at 0.3% copper only. That was based on 70,000 meters of drilling by Rio Tinto and Teck and some others. We then drilled, when I say Koryx, the Koryx team drilled 8,000 meters last year and put out a new resource in September last year, which increased the grade from 0.3 to 0.35% copper only. That's almost 15%. That was based on more high-grade shoots, i.e. better modeling the high-grade shoots, plus some improved constraining only in some of the areas where we had drill results. So really what I'm saying is with very little drilling, we had a big effect on the overall mineral resource. Now, that the past is never the best predictor of the future, of course. So I'm not suggesting that with a lot of infill drilling, we'll easily get another 15%. But in my view, constraining should give us between 5 and 15%. Byproduct should give us another 5 to 15%. And then the high-grade shoots, maybe another 5 to 15%. Now, we're going to land somewhere in the middle, but that's how I get from 0.35 to 0.45% copper equivalent. So I don't think it's completely... I don't think it's an unrealistic target, but at the same time, it's an ambitious target because you have sort of diminishing returns, as you, like with everything, it's hard for me to predict, so I'm already sticking my neck out by giving you these numbers. Let me give you some other numbers. Why am I so hung up about 0.45%? I can tell you that the mines that we talk to, which is Barrick and First Quantum in Zambia, who are close by, who are both operating big open pits, they are operating at those grades right now. So new mines in Zambia are being built on mineral resources of sub 0.5%. So 0.45% used to be low grade. I would call it moderate grade. It's not low grade, it's moderate grade. But it's economic and it's going to be feasible. That's really what we're trying to achieve.
Great context there. You definitely see that in global mines that the grade is slowly slipping over time as no real high-grade, large-scale mines have been found. And therefore, these previously lower-grade projects have now become modest grade or medium grade. And definitely very, very economical. We have a lot of color already.
Can I give you one more point on that? Very important. There are two famous large copper open pits in the world. There are many, but let me mention two low-grade ones. One of them is Bingham Canyon in Salt Lake City, Rio Tinto. And the other one is Palabora in South Africa, also Rio Tinto. Rio Tinto were experts in large open pit mining and also experts in sub-level caving subsequently. Now Palabora, 30, 40 years ago when it was in full swing as a big open pit, was running at 0.5% copper. And at the time it was one of the most efficient, lowest cost operations in the world. Exactly the same with Bingham Canyon. So what I'm saying is at 0.45%, Haib, given the other advantages it has, I think will become a very profitable large open pit. And that's really what we're trying to prove. I'm talking like multi-billion-dollar NPV.
Makes complete sense. Thanks for that extra color there, Heye. Very, very interesting to see those historical parallels. Last main question I have on your 2025 drill campaign. Of course, we also have to talk about the studies you're doing. Very exciting work there as well. But on the drilling campaign, what is the ratio really between trying to find these new high-grade zones versus doing this infill drilling? How should we expect those meters to be allocated?
Probably a third, one third, at least one third to 40% infill. Then probably a quarter to a third high-grade domains. And the rest growth, deeper, sideways, lateral. But just a rough guideline, because some of the holes will fulfill multiple purposes. So
makes complete sense. Appreciate that. Now your technical program, you've outlined this in a news release earlier this year. I believe the figure you referenced for this is 20 million Canadian dollars. What is this technical program all about, Heye?
So let me just conceptually talk to you about what our objectives are. And that is, we obviously want to put out or we want to complete a PEA and a pre-feasibility study this year. The PEA, generally speaking, I think in our industry, PEAs generally I consider them marketing documents. They are not feasibility studies, they are marketing documents. PEAs are intended to show the potential of a mineral deposit, and you can use inferred resources, you can do all sorts of projections, etc. So it's a very loose scoping level study, but it has generally speaking, when you put out a PEA, you should give it your best shot, and I'll come back to why I call it that just now. Pre-feasibility study has a lot more credibility because it's based on real quotes. Yeah, there's some factoring involved, etc. It's based on indicated resources only. You're not allowed to use inferred resources for a pre-feasibility study. So the level of certainty in a pre-feas is much higher. The quality of the estimate, capital and operating cost estimate, is much better. So it's just, if you're going to talk to corporates and third parties, they don't really pay attention to PEAs. They need pre-feasibility studies, and that's why we're doing it. Now, the reason I belabor this point is because we are at the moment not 100% sure whether we will publish the PEA or not. And the reason for that is that our drilling will take a little bit longer than the timeline we have for the PEA. Because, I told you earlier about logistics and mountains and getting teams up to speed and just getting the drilling done. It's unlikely that we will have an updated mineral resource before the end of the third quarter. But we will be ready to do a PEA from a technical perspective around the middle of the year. So, and there's another purpose. We need the PEA because we need a technical study to commence with permitting. The PEA will already correctly outline the scope of the project, i.e. the size and the size of the processing plant and the type of processing plant. But it will not be our best shot in terms of the mineral resource. It won't have all the grade improvements, etc. in it. And that's why if we publish it, it might be counterproductive because the market doesn't understand all these nuances. They just see PEA. And so that's why at the moment I'm not promising that we will publish it because it may not be the optimal solution, in which case we'll just do it internally. And the other reason is that the pre-feasibility study will follow so quickly after the third quarter. Basically, we're still geared for pre-feasibility study at the end of this year. That's why we're thinking currently, let's just publish the pre-feasibility study, and that's it. And do the PEA internally and use it for permitting and trade-off analyses, etc. In any case, the PEA, just like we did with Osino, the PEA is just it's just another step in the road because the work that we're doing right now is already geared for the pre-feas being done to the level of a pre-feas.
Makes complete sense to me, and it sounds like a well-educated step to potentially not release that PEA if it doesn't contain all the work that you're doing now and if the PFS is following so quickly. Perhaps something to outline as well is, of course, your track record that you have in this industry. You've already made some exits in the past. Crucial context of this technical program, is this already building up to a potential exit? Is this really the ramp up to that, or is that a bit too early still, and it requires a bit more years under the belt before we can start thinking about that?
I can't talk freely about this, but I'm sometimes a bit hesitant because when we glibly talk about exits and sales, etc., it sounds a little bit cheap, to be honest. And I mean, of course, it's good for shareholders, but I don't only do this for shareholders. I'm a very proud Namibian. I do this for socio-economic upliftment of the country. And I do this because I truly want to see this project develop, because we'll make such a huge difference in Namibia. From that perspective, if I want to be more diplomatic about it, I would say that we're setting the project up to be built. And we will do what's necessary for this project to be built. And now that will involve a large technical partner, without a doubt. We are far too small for the expected capital cost. We're talking $1.5 to $2 billion US. A junior is far too small to build such a mine. So we will need a partner in some shape or form at the right time. Whether that's a clean sale, or whether it's a JV arrangement, or whether it's a strategic partner, it's too early to tell. We don't know. Obviously, we will be guided by value for shareholders, but also risk. Returns never come without risk. And the key risk here is financing risk and construction risk. So obviously, etc. The whole M&A angle is a topic for discussion, probably all on its own. But so that's the context. Generally speaking, the time for such a partnership is when the project is construction ready, i.e. fully de-risked, with a high quality technical study in place, a definitive study, and infrastructure and all the question marks resolved. I think that point in time is more or less at the end of next year. It's incredibly quick, I must point out. Like, there's no other copper project in the world with such a quick development timeline. But that's why end of this year, pre-feasibility study, end of next year, definitive study, all of next year, conclude permitting. And I think I would call this project construction ready when we have a mining license, environmental approval, the key local permits in place. I think with that, and that's more or less at the end of next year.
Really great context here, Heye. Thank you so much for that. And you already started touching base on finances. Of course, you are a well-capitalized junior. I believe you have about 17 million Canadian dollars in cash on the balance sheet and no liabilities. However, of course, we have been talking about quite expensive plans, 55,000 meters of drilling and a $20 million technical program. How does that roughly look like? How far do your current finances carry you? And what are really the plans to make this all happen?
Yeah, so luckily with an advanced project, there's a lot of historical spend already built in. So most of the heavy lifting in terms of expenditure has been done by predecessors. We are planning to spend about $20 million this year, which is not fully financed, so we will have to do a financing later this year. And that's mainly for drilling and the technical studies and the infrastructure improvements that we spoke about. And probably, I mean, we haven't budgeted and costed it, but I imagine that next year we would need another $20 or $30 million to conclude a definitive feasibility study and tying up of loose ends. So not a huge amount of financing required until the build. But yeah, we will obviously do a financing again at some stage. We've got to get the share price up. The company is heavily undervalued at the moment, and that's why we don't want to finance at this point. But usually share price takes care of itself. You need to execute. That's what we're going to do. But then just specifically, while you ask me about financing, we are not just looking, we are planning to list on the Namibian Stock Exchange in the middle of April this year. And the reason for that is it's not just a PR exercise. We have a big following in Namibia. Namibia has a lot of high net worth individuals that invested in Osino that want to invest in Koryx. Some of them are already invested. So we want to give them liquidity and the ability to trade the stock. We also want to access quite a good pool of money that's available in Namibia, institutional money, for the future. And that's why we're doing that listing. But in order to make the listing real, and not just a PR exercise, we've got to do a small financing there, which we will do. We don't know how much it's demand driven, but we will do a small private placement for Namibian investors geared specifically for them, probably May, after the listing. But that's sort of a strategic financing. And then thereafter, whenever the market is ready for it and the share price is good and so forth, late this year, I think would be the right time to do another financing.
Great, Heye. Thanks for that extra color there. And you're at such an exciting stage for a junior mining company. The resource has already been found. Quite a bit of risk has been taken by the previous explorer there. And now really you just need to optimize and finalize. And of course, there's some capital required for that, but it is, relatively speaking, for junior mining, de-risked in that sense. And it's a very exciting stage, and a lot of wealth can be created here, as you've shown with your track record. And perhaps quickly touching base, last topic I would like to hint at is catalyst, drill results, all that type of stuff. What should investors expect for the next couple of months? What are really the main news reports, the catalyst to look out for?
Before I get into that, can I make one comment on what you just said? I really appreciate you get it. What you just described, it's so low risk. Like for me, that process of improving what we have, answering all the questions, ticking the boxes, getting it done. It's almost a mechanical process. All it needs is money, drive, and the right knowledge, i.e. people and, experience. And we have all of that. And we've just done it. So to me, it is the risk of us not being able to achieve this is very low. But the value that's unlocked, you just saw that with Osino. We took Osino, went up by a factor of 4 in about a year, a little bit more, 1.5 years through M&A. And I mean, over here, it could be something similar. So I'm very excited about it. And I really think that investors often forget the risk side of the risk-return equation. So over here, you've got low risk, possibility for a very good return. So anyway, thanks for getting that. On catalysts, it's mainly drill results, technical studies, de-risking of utilities, water, power, commencement of permitting, environmental permitting, mining license application. So those are the main ones, and obviously we need to try and get news releases out as often as possible, but probably in a frequency of about 1 or 2 a month. I think that's what we've done historically, and that's sort of how the news will be generated. In addition to that, what we haven't even spoken about is Zambia. We do have 2 very interesting licenses in Zambia. We've done an early stage assessment. One of them is very interesting, highly prospective, has had quite a lot of work done on it already. We already have anomalies there, surface anomalies. We need to do some work there this year. So the plan is to bulk up a little bit, try and acquire some additional licenses to bulk up the portfolio. At the same time, improve the portfolio by doing some technical work to get it up the curve. And then we will look to monetize that. Either through a spin-out or an earn-in with somebody. We see value there, but it's greenfields. And I mean, if we look at the value that's sitting in Haib, we're talking hundreds of millions of shareholder value that can be created in the de-risking of Haib. With a greenfields exploration portfolio, you're not going to get the same. But we know that Canadian investors like that sort of exploration juice, so we're going to do some work there. But I do expect that we will probably spin those assets out. I must tell you, though, that just as an aside, those Zambian licenses have generated a lot of interest from majors because Zambia, as you can imagine, is very hot at the moment. Everybody wants to be there, and it's difficult to acquire ground in Zambia. It's expensive and difficult and complicated, and so we've had a number of approaches from very credible groups, but we just need to do a bit of our homework, and then we will pursue those options. But that's some additional news flow value over the next little while.
100%. Very, very exciting. Everything that's happening at Haib and in Zambia. We could spend an entire video, and perhaps we should do that in the next time we meet up, Heye, just talking through your assets there and what the potential is there. But we've taken up already quite a bit of time of you and also the viewers at home. So thank you so much for taking the time today. Really appreciate it. And best of luck the next couple of months to make everything work.
Great. Thank you, Stijn. Really appreciate being on your show.